What? Something big just happened. Nio, an electric vehicle manufacturer based out of China, just announced that they hit a company record for quarterly vehicle deliveries during a global health crisis. This is quite a feat for Nio, as the company is still in its infancy. They delivered over 10,000 vehicles in the second quarter of 2020. This growth of 191% as compared to the second quarter of 2019 is impressive, to say the least. I have spent many hours researching Nio Stock in preparation for this video, and I have to tell you, I am very impressed with the company, its management, and its technology. I cannot believe that I'm saying this, but Nio does have one piece of proprietary technology that could actually help it steal a lot of market share from Tesla. While doing research for Nio Stock, I realized that Tesla vehicles actually have one major weakness from a practicality perspective, and Nio has actually already overcame this weakness with their vehicles. I will go over my thought process in just a minute, but trust me, you do not want to miss out on hearing about this piece of patented and proprietary technology that Nio has and Tesla does not. My name is Blake, and today on 9 to 5 Investing, I'm going to tell you why I think Nio Stock could truly be at a turning point, but I'm also going to balance out this euphoria with some bearish points. If you watch this entire video on Nio Stock, you should be able to make your own informed decision on whether or not to buy Nio Stock in 2020.
9 to 5 Investing.
So what actually differentiates Nio from Tesla? Is Nio Stock worth investing in when you have the option of investing in Tesla, a significantly de-risked and more established electric vehicle manufacturing company on the public market? These are the tough questions we must strive to answer when considering an investment in Nio Stock. Tesla really overshadows Nio in many ways. As I had mentioned just a minute ago, Nio actually had a record number for quarterly deliveries in Q2 2020. Then on the same day, according to this press release, Tesla announced that they delivered over 90,000 vehicles to customers in the second quarter of 2020. This is not a record-breaking number of quarterly deliveries for Tesla. However, that 90,000 just kind of has a way of overshadowing Nio's 10,000, even if Tesla is a much more mature electric vehicle manufacturer company. This occurrence actually reminds me of the 2009 Video Music Awards hosted by MTV, where Kanye West interrupted Taylor Swift's award acceptance speech to give a shout out to Beyonce for her music video. In my analogy, Nio is Taylor Swift, Kanye West is Tesla's Q2 2020 delivery numbers, and Beyonce is of course Tesla.
Yo, Taylor, I'm really happy for you. I'm gonna let you finish, but Beyonce had one of the best videos of all time.
Beyonce, Tesla will probably continue to outshine Taylor Swift, Nio for many years to come, and honestly, this might never change. But is the Taylor Swift, in my analogy, worth paying more attention to? Does Taylor Swift have some juicy, bullish investment qualities that Beyonce simply just doesn't have at this stage in the game? After all, Nio's market cap is just 16 billion, which is only a fraction of Tesla's $262 billion market cap. Why do we care? Well, it is much easier for a $14 billion market cap to 5x, 10x than a $262 billion market cap. Also, consider that fact that Nio is growing their sales and vehicle delivery numbers at an impressive pace. So with the opportunity in mind that comes from Nio being such an early stage infancy type company as compared to Tesla, let's just dive right into my top bullish points. I easily put 30 plus hours into each one of these videos between researching the stock, writing the script, recording the video, and editing the video. And I am more than happy to do it, as teaching stock analysis is my passion. But every time that someone clicks that little red subscribe button, I gain another ounce of motivation to spend my weekends making these videos. Let's build our knowledge and our wealth together. Consider subscribing today and joining the 9 to 5 investing community. Bullish point number 1, Nio has developed proprietary and patented technology that allows their customers to visit Nio power stations and basically swap out their fully depleted batteries for fully charged batteries in a time span of just 3 minutes. This battery swap technology is a complete game changer in my opinion, and it is a technological feat that Nio has accomplished and Tesla has not. Tesla actually tried to implement their own battery swapping scheme back in 2018, but they actually only ended up building one battery swapping station and they quickly killed the project. This battery swap technology solves really the main issue that I see consumers having with the adoption of electric vehicles: those long charge times. If you own a Tesla, depending on the model, you're going to have to wait between 5 and 13 hours for your vehicle to fully charge. But if you own a Nio vehicle and you have access to one of the 131 Nio power battery swap stations across 58 Chinese cities, then it is only going to take you 3 minutes to have a fully charged vehicle. And if you really think about it, 3 minutes to swap out the battery could potentially be less time than it takes to fill a traditional gasoline-powered car with gas. Nio claims that Power Swap, which is just the name of the service for switching out the Nio batteries, is the ultimate and exclusive power service that is powered by over 500 patented technologies. As of May 26, 2020, Nio announced that they had completed 500,000 battery swaps, which tells me as an investor that this service of swapping out the batteries is not just in like the testing or development phase. This is a fully commercially viable service that is out there in the real world today. In my opinion, this is the one place where Nio's technology really outshines Tesla's technology. If I were to buy an electric vehicle, which I do plan on doing one day, I would buy a Tesla because I live in the United States and Nio power stations do not exist in the United States. But let's imagine just for a second that there are actually Nio power stations all across the United States. Now I'll preface this by saying I love Teslas and would love to buy one day, but I would seriously consider buying a Nio vehicle just based on this one aspect of their technology. They're cutting charging time from a minimum of 5 hours all the way down to just 3 minutes, which is ridiculously practical. I see this battery swap technology as being a huge selling point in China for these Nio vehicles over Tesla, and that being said, this technology is extremely bullish to me. Bullish point number 2, Nio has considerable support from the Chinese government, as most recently demonstrated by the equity deal that ended with Nio having a cash injection of $1 billion. Now, I do have mixed feelings about this deal that Nio made with the group of state-owned entities connected to the Hefei government, but I do believe it is much more of a positive development than a negative development. To make my case here, I want to emphasize that in 2019, Nio lost $1.6 billion and ended the year with only $151.7 million on their balance sheet. So did bankruptcy or a lot of secondary offerings seem imminent at the end of 2019? Absolutely. But then at some point in early 2020, Nio started having bailout type of discussions with the government of Hefei, which is the capital of the Anhui province. Basically, Nio struck a deal with state-owned entities connected to the Hefei government where they would receive $1 billion in cash in exchange for creating a new subsidiary called Nio China. As a result of this deal, Nio had to commit, quote, its core business and assets in China, including research and development, supply chain, sales and services, and Nio Power into this newly formed subsidiary. These state-owned entities basically own 24% of Nio China, while Nio continues to own 76% of this newly formed subsidiary. Additionally, as part of this agreement, Nio has agreed to build their new headquarters in Hehe. In my view, although the creation of the subsidiary and sale of part of the company to these state-owned government entities is not ideal, for those holding the ADR shares available for purchase off the New York Stock Exchange, it is still far better than bankruptcy. And the bullish point that I'm trying to make here isn't even the equity deal that Nio struck with these state-owned entities. It is more that the Chinese government clearly wants to see Nio succeed. I mean, think about this for just a second. Do you really think the Chinese government wants to see Tesla, an American company, continue to dominate electric vehicle sales in China? The answer is absolutely not. The circumstance of Nio being the closest Tesla equivalent that China has makes me think that the Chinese government would never actually let Nio go bankrupt. But of course, if Nio was ever backed into a corner from a cash perspective, the Chinese government could always find some way to screw over the international shareholders. To be clear, I have absolutely nothing against China, but this is the same country whose president, Xi Jinping, basically convinced parliament to do away with term limits and allow him to serve indefinitely. My point is, anything could happen from a restructuring perspective with Nio if the Chinese government was heavily involved. Regardless, I do believe that the backing from the Chinese government is a bullish point. Bullish point number 3, China is actually the largest market for electric vehicles in the world. There's not a whole lot of discussion about this bullish point, but nonetheless, it is a significant circumstance to consider. This bullish point really just kind of speaks for itself. I mean, China is the largest market for electric vehicles in the world. Naturally, this circumstance just creates more opportunity for Nio to sell their vehicles in China without running into any costs of international expansion, and consequently, this allows their share price more room to run in the years to come. Bullish point number 4, Nio has the ambition to expand internationally, but is realistic about what they can accomplish in the near term. In a recent interview with Auto News Europe, company founder and CEO William Li basically expressed that the company would like to eventually become a global brand, and the first step towards becoming a global brand would be expansion into Europe. I really appreciate the CEO of Nio because he is realistic. Li also stated in the same interview, quote, "If we expand globally, we should first be profitable. That is why we should be very careful when we expand outside of China, as it is very easy to enter a market, but very hard to survive and win." Li also emphasized that Nio is a very young company with limited resources at this point in time. Li clearly understands the opportunity internationally is massive, as the demand for electric vehicles is growing rapidly in the United States and in Europe. But what the heck is the point of expanding internationally if you're just gonna lose more money and eventually be forced out of the market? Li, the CEO, is realistic about Nio's short-term prospects, and I love to see this in executive management. Nio's CEO wants to figure out how Nio can scale into profitability in China. Then, once they figure out that scalability and profitability in China, they can take their expanded resources and take a stab at gaining some market share in Europe and maybe eventually the United States. So my bullish point here is that I do believe one day, eventually, Nio will become a worldwide brand, and this is in thanks to their CEO being measured about his decisions and having the ambition to, when it makes sense, expand internationally. And if you're planning on holding Nio stock for the next 5 to 10 years and beyond, this should make you very excited. Bullish point number 5, the electric vehicle market in general has been on fire lately as there have been many positive developments for the industry. Tesla has led the bull stampede for electric vehicle stocks. But in this bull stampede, we have seen countless other electric vehicle companies make major moves in terms of their share price, including the Nikola Motor Company, Hyliion, and Workhorse Group. A lot of this hype has to do with the surge in demand for electric vehicles worldwide. Statistica reports estimates that the electric vehicle market as a whole will grow about 5-fold from 2019 to 2026. Government incentives and regulations are ramping up within certain states within the United States, certain countries within the European Union, and in China, as the world realizes an urgency to move towards more sustainable transportation. The trend and the momentum is heavily towards the adoption of sustainable vehicle solutions, including electric vehicles, and this is a huge bullish point for Nio Stock. Even though Nio has game-changing swappable battery technology, the backing of the Chinese government, and the broad trends in their favor, there are still huge risks with this stock, and we need to talk about that too. Bearish point number 1, it took Tesla 15 years to scale into profitability, which just shows us how hard it can actually be to become a profitable vehicle manufacturer. Nio has only existed since November 2014, which makes the company less than 6 years old. As I just mentioned, it took Tesla 15 years to scale into profitability. If Nio is able to match Tesla's timeline, then that means they would have about 9 years left until they see their first profitable quarter. Could Nio become profitable quicker than Tesla did? It is certainly possible. Nio is operating in a different geographic area than Tesla was in the early days. And on top of that, as I had mentioned a little earlier in the video, the trends are towards electric vehicles, towards sustainable transportation. I don't think Tesla had that as much in the early days. Nio definitely has that now. I believe that Nio's #1 challenge is really just going to be figuring out how to profitably mass produce their vehicles, especially given the fact that they're using a third-party contractor right now to make all of their vehicles. I guess that the point that I am trying to make here is that achieving enough scalability to where you're actually profitable is brutal and very capital intensive in this vehicle manufacturing business. It takes a lot of time to achieve this and a lot of capital. But just how much time would this take for Nio to accomplish? Only time will tell, but the process of scaling profitably will be an arduous process for Nio, and I see this as the most likely place for Nio to fail, as actually building up those factories and learning how to manufacture, mass produce all these vehicles profitably is an extremely capital intensive process. Bearish point number 2, Nio is very dependent on JAC Motors, a state-owned vehicle manufacturer, to manufacture all of their vehicles. Nio pays JAC Motors to manufacture all of their electric vehicles instead of them doing it themselves. There are certainly advantages to outsourcing vehicle production, as Nio is not going to have to build up their own factory, and they're not going to have to spend tons of cash learning how to run the factory to efficiently produce the vehicles. However, at a certain point, Nio is going to need to take over their production process in order to basically keep their prices low enough to compete with Tesla and other potential competitors from a pricing perspective. The more scale a vehicle manufacturer achieves, the cheaper the price of each vehicle they produce becomes, at least to an extent. As demand for Nio's electric vehicles grows, it is going to prove to be more and more costly as compared to the alternative of just making the vehicles themselves to outsource this vehicle production. In the next several years, I would really like to see Nio move away from this dependence on JAC Motors, as I believe when they get more demand, this is really just going to be a weakness for them, because they are never going to be able to produce their vehicles as cheaply by outsourcing the work as they could when they have massive scale producing them themselves. Bearish point number 3. Basically, the United States and China have worsening geopolitical relations, and a result of this is the Chinese economy could have a downturn, which would cause a sap in demand for these luxury electric vehicles that Nio produces. Now you might be wondering, will I, Blake from 9 to 5 Investing, be looking at opening a position in Nio stock in the near future? And the answer, unfortunately, is no. And this is not because I don't like the company or think that the long-term prospects are good. It's just because I have all my cash tied up in other investments right now. If I had the cash at this very moment, I would probably buy a small position in Nio stock, as I believe the company has a lot going for it. And if they are able to scale into profitability, they are going to be a leading brand for electric vehicles in China and potentially even around the world. I mean, I already had a full segment on it, but I really do believe that this swappable battery technology is a game changer, and it's really the most attractive thing, in my view, that Nio has going for it right now. If I missed anything super critical about analyzing Nio stock, please let me know in that comment section below, as I love hearing feedback. Thank you so much for watching. If you enjoyed this video, consider subscribing and have an excellent day. Don't forget to stay hydrated. See you guys next week.
9 to 5 Investing.